Albuquerque was the one desert region market performing consistently well over the past couple of years, but we've seen some backsliding over the past 2 quarters. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Duke City update. 2 quarters ago, apartment occupancy in Albuquerque hit 96.1%. That was among the nation's best rates at the time, and the solid rates were seen across the board. Every product age group and every submarket had rates around 95% or better. And around the same time, we're starting to see year-over-year job change numbers pull into positive territory. So it really appeared that this market was set to see some pretty steady, solid growth going forward. But then, over these past couple of quarters, we've seen the story change dramatically. Albuquerque recorded back-to-back quarters of net move-outs for the first time since the recession, with demand registering at negative 1,080 units over that time frame. And that brought occupancy down 2.1 points to a rate of 94%, which meant Albuquerque had fallen back below the U.S. average, which was 94.9% as of Q1. And the backtracking hit all but one submarket in every product age group. And the biggest drops came in older apartments, declines of 2.5 points in units from the 80s, 70s, and earlier, and that left only one product age niche around 95% or better, as you could see, that being the 2000 plus stock at 95.3%, down 0.9 points over the past 2 quarters. But no niche was in particularly bad shape. The weakest was the 80 segment, 93.4%. Among submarkets, big drops in the foothills, North Valley Uptown, and Northeast Heights, all down 2 to 4.4 points over the past 2 quarters. The one submarket that did not see occupancy drop was downtown Albuquerque, which went up 0.3 points to a Metro best 96.9%. Elsewhere, we see rates ranging from 92.3 to 94.4%. So what drove this occupancy decline? Well, it's certainly hard to tell since Q4 and Q1 are traditionally weaker leasing periods anyway, but the local economy isn't helping. It looked like Albuquerque was finally showing some progress in 2011 by seeing year-over-year job change turn into positive territory, as you can see from this chart, but it just hasn't been able to build any momentum. Very flat job change numbers in recent quarters. Albuquerque didn't really cut rents much during the downturn. That certainly helped. And somewhat surprisingly, Albuquerque was among the first markets nationally to show some really good rent growth numbers coming out of the recession. Annual rent growth topped 4% back in Q3 2010 and stayed in that range for most of the next 5 quarters. But year-over-year rent growth came in at just 2.5% as of Q1 2012. And among submarkets, absolutely no correlation at all to occupancy rates. The one with the best rate, downtown Albuquerque, actually cut rents 0.2% year over year, and most submarkets posted growth right around 3 to 3.5%. And it's tough to bend down a forecast for smaller markets like Albuquerque that don't tend to follow the pattern that the models might suggest, but despite the recent backtracking, this market remains more fundamentally solid than most markets in the desert region of the country. And so we're expecting Albuquerque's apartment market to continue trending generally upward, but with some volatility along the way. And that wraps up for Albuquerque. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.